Alright, for this video, I wanted to discuss a common question I get each year, which is, can you claim the child tax credit if you don't have any income? So I've got one slide here which lays out some of the rules, and I've created this table here that's going to summarize the fact patterns that we're going to be looking at. So I've got three sample returns here, so three versions of this where we have the same taxpayer with her one daughter that's going to be the qualifying child, but different levels of income. So we could see how much income, if any, you need in order to claim either or both of these credits. So if we start with just some of the basics here, the child tax credit, and this is for the 2023 year, is going to be $2,000 per child. Now, the additional child tax credit is that portion of the CTC that's refundable. And the maximum refundable portion for this year is $1,600. Now, last year it was $1,500 in 2022, so it's up $100 this year, and it could potentially be increased again. So there's some legislation pending which would retroactively increase it from $1,600 to $1,800, but as of now, that still has yet to be passed, right? So we're still working with the $1,600 maximum. So back to the question at hand here, which is, do you need to have income in order to claim the child tax credit or the ACT or both? And so I've summarized three rows here where we have the income profile for the taxpayer and then whether they can claim the CTC and or the ACTC. So in this first scenario, let's say you have a taxpayer that doesn't have any earned income. So they don't have a W-2, they don't have a Schedule C because they weren't self-employed operating a business, they had none of that, and they had either zero investment income or very little. Now, for the child tax credit, you're not going to be able to claim any of it. So you're still eligible for it, but the CTC is a non-refundable credit, which means that initially you've got to have some taxable income and tax to be able to utilize it. Otherwise, it just doesn't provide you any benefit. And the same goes for the ACTC. So the additional child tax credit, in order to claim this, you need to have some earned income. All right, not just some income, but it's got to be earned income in order to leverage this refundable portion. So let's have a look at the tax return for this version, and then we'll go back to the slide deck and then cover the other two. So we've got a 1040 here for Jane, taxpayer. She's filing as head of household for 2023, and she has one dependent who is her daughter, age 8 years old, so she's under 17, so she's eligible for the CTC. Now, when we look at the income here, we can see on lines 1, where we have the earned income, we have nothing, right? So she doesn't have any W-2 wages, nothing like that as far as earned income goes. The only income she has being reported this year is a little bit of interest income on a savings account. So when we look at after applying her standard deduction, so that's the standard deduction for head of household filers, her taxable income is reduced to zero, which means that lines 16 and 18, we don't have any tax, right? They can't impose a federal income tax on $0 of income. So if this is your scenario, you're not going to be able to claim any of the CTC. So if we have a look at the Schedule 8812, we'll see how the math works out here and why that's the case. So in Part 1, we start with the adjusted gross income of the taxpayer. So $102 is her total AGI, so that's line 11 of her 1040, right? So line 11 down here, $102 is the starting point. We don't have any adjustments, right, for income from Puerto Rico or foreign earned income exclusion. So we've just got the $102. We have one qualifying child here on line 4, which means we're starting with a potential $2,000 credit. Now, as far as the income thresholds for the filing statuses, that's down here on lines 9 and 10. So a head of household filer can have $200,000 or less in income and be able to claim the full credit. If it's over $200,000, then there's a phase out. So in her case here, we're obviously well under the $200,000 mark, so there's no phase out of or reduction of the $2,000 credit. So now we just have $2,000 available, and the question is, how much of this can we use? Well, the initial credit is non-refundable. So that means you can use it to offset your tax dollar for dollar, and then that's it. It's reduced to zero. You're done, and then you move on to see whether you can claim the ACTC. So if we look at the credit limit worksheet for this taxpayer, the credit limit worksheet effectively tells us how much tax we're paying, and then the amount of child tax credit is claimed up into the amount of tax. So if we look at Jane's return here, the amount of tax she has from line 18 of her 1040, right? Line 18 is zero. So she's got zero tax that's being imposed on her income. And so for that reason, the amount of child tax credit she can claim is also limited to zero, right? She can't use the tax credit to offset a zero tax liability. So the amount of child tax credit that Jane can claim on her return is just going to be zero, right? So that's line 14, zero. This is the amount she enters on line 19 of her 1040. So she goes back to page 2 of the 1040, line 19 for the CTC is just zero. So at this point, no benefit is derived because we have zero taxable income and we have zero taxes. Now, the second question is, once we're through part one, do we have any refundable portion, right? So the refundable portion is the additional child tax credit, the ACTC. This is completed in part 2A. So the starting point here, line 16A, we go back to part 1 and subtract line 14 from 12. So if we look at line 14, it's 0. Subtract that from $2,000, leaves us with $2,000 available as credit that hasn't been used. Now, the refundable portion is limited to $1,600, right? So we've got one qualifying child times $1,600 means $1,600 is going to be the initial cap on how much is going to be refundable. All right. Now here's where it starts to go south when you don't have any earned income. Line 18A is where we enter our earned income. So line 18A is 0 because we don't have any earned income. And so question 19 asks us, is line 18A more than $2,500? And the answer is no, right? So we leave 19 blank. Line 20 is going to be 0. And so 20 is now the new ceiling. And so because 20 is 0, right, line 20 is asking us now, is line 16B 4,800 or more? The answer is no. We're not a bona fide resident of Puerto Rico, but the second sentence asks, otherwise skip part 2B and enter the smaller of line 17 or line 20. Line 17 is 1,600, line 20 is 0. The smaller number is 0 there, so line 27 for the additional child tax credit remains $0. So on page 2 of the 1040 here, we've got the ACTC report on line 28, $0. So based on this fact pattern here, with no earned income and only a little bit of investment income, which creates taxable income of 0, you don't get any benefit from the child tax credit or the additional child tax credit for federal tax purposes. So those are both going to be none. Now, what happens if we switch it up a bit, and now we say in scenario 2, we have some earned income, we have no earned income, but we have a large amount of investment income. What happens now? Well, the additional child tax credit is still going to be none because we don't have any earned income. But the child tax credit is going to be available here if we have taxable income and we have some tax. So do we have taxable income on line 15? Do we have some tax that's going to be on line 18 of the 1040? If that's the case, then we might be able to use some of the credit. And so that's this scenario here. So same taxpayer, same qualifying child. We see on rows 1, still no earned income, but the investment income, we've got 102 of interest and then some capital gains, 28,880 that she realized during the year. So let's say in this scenario, she wasn't able to find some employment, so she sold some stocks at a large gain because she needed the cash, right? So now our total income is $28,982. We have the same standard deduction for head of household filers, and our taxable income is a positive amount now. It's $8,182, and we do owe some tax. So now we owe $176 on that amount of taxable income. So now what happens, right? So we still have no earned income, but we've got enough investment income to create a tax liability. So if we look at the 8812, we've got the adjusted gross income here, $28,982. The same one qualifying child for $2,000 of available credit. The filing status threshold still $200,000 for head of household filers. And because we're well underneath the $200,000, we have no reduction to our $2,000 credit, so the $2,000 credit remains. Now, when we look at our credit limit worksheet, what we find is because we have some taxes owed, we can start to use some of this $2,000 credit. So we've got $176 of tax. That's from line 18 of the 1040. We don't have any adjustments for other credits coming from Schedule 3 here. So we've got $176 that can be used to offset the $176 in tax. So on the 8812, we report $176 of the $2,000 credit is used, and this amount is transferred to line 19 of page 2 of the 1040. So here we have CTC from 8812, $176. And when everything nets through, we can see the total taxes owed is 0. So this is how the credit initially works, right? It's non-refundable. So you use it to just offset the taxes you might owe. If there's any excess, it's generally not going to get paid out to you. And that's what we see in this scenario because we have no earned income. So if I go back to the 8812, now we're looking at the ACTC Part 2A. So line 16A, how much of the credit hasn't been used yet? So we take line 14 subtracted from the 2,000. It leaves us $1,824 remaining. We've got one qualifying child with the same $1,600 limit per child. And so $1,600 is going to be what's potentially available as a refundable credit. Now, same issues with line 18, right? So line 18A, earned income, still 0. So we've got a lot of income from investments, but we have no earned income to be able to leverage this credit. So same issues with questions 19 and 20, right? We don't have income exceeding $2,500, so line 20 is just going to be 0. 0 is now the cap, right? So we get nothing. So now it asks, skip Part 2B, enter the smaller of line 17 or line 20, and enter that amount on line 27. So the amount of additional child tax credit that we're claiming here is 0. So line 28, ACTC from the 8812 is 0. So of the $2,000 child tax credit that would potentially be available, we were only able to use $176. The other $1,814 that was left over, that's just lost, right? That's lost altogether. So that's that scenario where you have no earned income, but you do have some significant investment income that creates taxable income and a tax liability. So now for the last scenario, right? So what if our profile looks a little more like this? We do have some earned income, but a little bit. And we do have some investment income, but not a whole lot, right? Well, now for the ACTC, we've potentially got something here, right? So if you have earned income and you have more than $2,500 of earned income, you now fall within this range where you could get some of the refundable credit. The same goes for the CTC option that we had before, right? If the amount of earned income you have and the amount of investment income, if that jumps up to create taxable income and a tax liability, so we see positive amounts on lines 15 and 18, we might be able to use some of the CTC. Now, in this scenario, let's say that Jane here, she has $3,000 in wages. So she had, let's say, a part-time job, had $3,000 of W-2 wages, and the investment income she had was only $102, so that interest, but she didn't have the capital gains. So now our adjusted gross income, $3,102, it's still well below the standard deduction. So after claiming the standard deduction, her taxable income is 0, tax is 0, so now we still don't get any child tax credit, right? So if we look at our 8812, Similar issue that we had with the first example, right? We've got some income up here. We're well below the 200,000 phase out, so that's not the problem. But the problem is with the credit limit worksheet. If we don't have any tax, we can't use any of the $2,000 credit to offset that tax. But in her case, she might be able to claim the additional child tax credit, so the refundable piece. So here's where the Part 2A changes for this scenario. So we've got the additional child tax credit here. Line 16A, we're going back up here. We're subtracting the 0 from 2,000, so we still have the $2,000 of credit that hasn't been used. We have one qualifying child at a $1,600 cap, so $1,600 is a limit. But now lines 18 through 20 have changed a little. Line 18A, now we do have some earned income. So 18A, we report the wages that she had, the earned income, $3,000. We're not including the investment income, just the earned income. So line 19 is asking us, is the amount on 18A greater than $2,500? The answer is yes. So we subtract $2,500 from $3,000, and that leaves us with $500. Now the cap on this is going to be $500, so the excess times 15%. So line 20 is now no longer 0, it's a positive $75. $75 is now the credit that we can claim, right? So again, we can skip part 2B here and enter the smaller of line 17 or line 20. Well, the $75 is smaller than the $1,600, so we enter the $75 at the bottom here on line 27. This is the amount of ACTC that flows through to line 28 of the 1040. So we go back to her 1040 here. We have a look at line 28 for the ACTC, and there's the $75. So in Jane's scenario here, no taxes owed, no non-refundable credits are being applied, but she does get a credit, a refundable credit back, $75 for the additional child tax credit. Now you'll see here also that Jane has the earned income credit, and she did have some withholding on her W-2. The earned income credit, it's available for her this year because she did have some earned income, and she has the qualifying child. I won't cover the EIC in this video. I've got some other videos posted that covers that calculation in more depth, so go take a look at those. But we can see how the numbers are working here, right? So again, if we just go back to the slide to summarize again, if you find that you're in a position where you don't have any earned income and you have little to no investment income, none of these credits are really going to be available, right? You're not going to be able to get either of them. If you find yourself towards the bottom here where you've got some earned income, you've got a low amount of investment income, the additional child tax credit is certainly likely going to be available. But again, the child tax credit, we're still coming back to that issue of you've got to have taxable income and tax to use the non-refundable element of the CTC. All right, so that covers it for this video. I hope that was helpful. If you have any questions, please feel free to leave a comment below. I do try to get to those, as many as I can. And I look forward to seeing you again on the next video. Thank you.